A continued rise in oil prices reflects investors' attitude towards both the OPEC Plus decision to cut oil production and the oil sanctions on Russian oil and gas. This is the way market participants express a grave concern over a possible sharp drop in oil supply. The best-case scenario, the global energy market is likely to face the biggest restructuring in its history, followed by changes not only in supply chains, but also in its major players. There is a likelihood that a price cap on Russian oil will lead to the emergence of new companies in the marine insurance industry. At the moment, the largest insurers are European firms. However, they may lose an impressive market share, which will affect the entire financial sector of the region. British banks will suffer the most. In any case, such a market restructuring will be accompanied by supply disruptions and local energy shortages in different parts of the world. If the situation does not change dramatically in the near future, oil prices will most likely jump above $100 per barrel. Brent crude oil futures have been trading upwards from the support level of $83 per barrel for the second week in a row. The quote has already come close to the high of its previous corrective range, limited by the levels of $95 and $95.80 per barrel. In this area, the volume of long positions may decrease, which will result in a sideways move followed by a pullback. To extend gains, the quote needs to consolidate above $96 on the forward chart. In this case, the way towards the level of $100 will open. Gold is relatively stable, although it has moved closer to the level of $1,700 per ounce. In fact, the metal has only approached the lower boundary of the range formed earlier this week, so it's too early to talk about a continued decline. The quote may well rise to $1,720 per ounce by the end of the trading week. After all, today's macroeconomic reports have no direct impact on the gold market. A drop below $1,700 per ounce is possible only if US job data turns out to be upbeat and well above expectations. And in this situation, the best way to make a profit is to trade with a view to breaking through one or another boundary of the range, which will help determine the asset's further direction. Notably, breakout will be confirmed after the price consolidates above or fixes below a particular boundary of the range on the 4-hour chart. And now let's get back to the situation with the sanctions against Russia. Despite a continued rally in oil prices, the Russian currency is losing value. The US dollar has already risen above the level of 61 rubles, and market participants have no idea how Russia will respond to new sanctions and act in the face of restrictions on energy exports. That's why the Russian currency is sliding. While there are no answers to these questions, the ruble will most likely keep trading under pressure. According to the chart, the dollar-ruble pair has added more than 7% since the beginning of the trading week, and this is a strong price change. Nevertheless, this does not yet indicate a shift in the market sentiment. The quote is still moving around the level of 60, which lies in a sideways range that has been relevant since midsummer. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.